If there's a will, there's a way. If you wait long enough, guidelines will change. And the guidelines that just changed just made it easier to buy a home. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. If it's your first time tuning in, do me a huge favor, hit the notification or subscribe button so you're notified every time we go live or post new content. We go live every Monday night at 9 p.m. on Facebook and YouTube, and we post content daily on Instagram and TikTok. So if you want to see daily information on mortgages, don't forget, follow us on Instagram and on TikTok. All right, guys. Also, this is an interactive live stream, so ask a lot of questions. All right. So Fannie Mae, right, one of the two main powers of mortgages, just made it easier for you to buy a home, right? If it was hard enough to get a mortgage, especially going conventional, one of the major powers, which is Fannie Mae, there is something called Freddie Mac out there, but most people deal with Fannie Mae. They just made it easier. They made it one step closer for you to get a home. They changed two major guidelines that made it easier for you to get a home. So what did Fannie Mae change? Okay, so the two changes: on time rent. And the second thing they changed was your credit score. That, I feel, is a big one. If you are buying a home with someone else, it's really going to help you who are buying a house go with a higher score to qualify for conventional loan, right? These with Fannie Mae, it's going to be a conventional loan. Okay, so these two changes right now, I think, are going to help a lot of people who wanted to go conventional. They had to go FHA. Now they can go conventional. They have that flexibility when it comes to going conventional, right? Also with credit score. Okay, so a lot of people, they want to, when you go conventional, you need a higher credit score. Now with the new rules, it's going to help you be able to go conventional. I think it's very big changes. I think it's really going to change how people get a home, right? People don't have to go FHA all the time anymore. It's going to give that flexibility. I really think Fannie Mae did this for two reasons. Because one, they had to do it because of HFHA, and because I think they need to draw more business away from FHA, right? So those are the two big changes that are happening to credit qualifications, right? So first of all, what is Fannie Mae? If it's your first time tuning in, or if you don't own a home, or you do own a home but you don't know what Fannie Mae is short for Federal National Mortgage Association, a government-sponsored enterprise founded in 1938. Fannie Mae is a private-held agency established by Congress to improve credit flow in the parts of the U.S. economy. It became publicly traded in 1968. Fannie Mae right now, though, is under conservatorship. Why? Because of the crash of 2008. Because of the crash of 2008, the government came in, bailed them out so they can preserve and conserve their assets and property, right? So because of that, that's the reason why they had to make these changes. Fannie Mae didn't go, hey, let me announce we are making these changes to rent, right? To count rent in qualifying for a home. It wasn't their decision. It was the decision of FHFA, right? So here's the first change, right? So the first change was not controlled by Fannie Mae. The second change was, the first one, the Federal Housing Finance Agency recently announced that positive rent payment history will be taken into account in Fannie Mae's underwriting system for conventional loans starting the weekend of September 18th, 2021. Okay, so with you making your payments on time, now they're able to take your on-time rent payment to count against you qualifying for a home, right? And how they do it is it's through desktop underwriting. So when you get a loan, you can do something called manual underwriting or automated underwriting. As you can tell, Federal Housing Finance Agency is making Fannie Mae change their underwriting system, their automated underwriting. They call it DU, some call it DO, depending on who you're talking to, right? So they're changing the automated system. So when your loan officer does your loan application, right, they put your rent in there, and you've been making that rent payment on time, they're going to take that as compensating factors in the DU, right? It's going to help big time, right? This is how it helps. Right now, if you go conventional and you have under a 700 credit score, they're either not going to qualify, even though Fannie Mae allows you to go down to 620 if you don't have a huge down payment. Let's say you're going 3% down or 5% down. There is a chance you won't pass DU. You won't get approved eligible. You'll have to go under a manual underwrite, which right now in the seller's market, no one's really chasing a manual underwrite borrower, right? If a seller, I'm going to sell either cash or a road of less resistance, right? So they're going to change the system. So if you were trying to go conventional and you had, I think, like a 660 to 700, right? Most likely you were going FHA. And a lot of people don't want to go FHA because, you know, they don't want, they don't have the huge down payment, so they have to go FHA. But some people don't want to go FHA because they want that flexibility that the private mortgage insurance can fall off automatically, not have to refinance out of it, right? Right now, rates are at an all-time low. People want to take advantage of that. And a lot of times they can't because they can't get the DU or the DO to pass. Even though conventional, Fannie Mae allows you to go down to 620, you won't pass if the automated system doesn't pass you. But with this compensating factor of rent, it is a game changer. Now, if you are buying conventional and you couldn't pass, I think this is going to push you over the edge for you to pass. Okay? So who does it help? Who does it help the most, right? So if you, of course, you're in the 720, 740, 800 credit score, most likely this is not going to affect you, right? Who's it going to affect? Low income and minority communities. 29% of Black consumers say insufficient credit scores or credit history is the biggest obstacle in getting a mortgage. Fannie Mae found that 17% of those would have been approved had their rent history been considered. 17%. That means it would give more flexibility to 17% of buyers, right? Also, it would help Black consumers qualify for conventional. Fewer than 5% of renters have rent payment reflect in their credit report. People didn't bother to add their rent to their credit report because it wasn't reflected. Now it is. We'll talk about how to get it on your credit report, right? Take into account rental history is particularly important for the 20% of the U.S. population. 20% disproportion Blacks and Hispanic consumers that had little established credit history. If you didn't have credit, right now, your rent can help you build your credit. Yes, there's other systems you can use to add your rent on there, but a lot of lenders weren't doing it for their borrowers. I think it's really going to change the game to add your rent on your credit report. It helps your credit score. Now, Fannie Mae, which is the main, if you talk to most lenders, they're going to ask, they're going to run DU or they're going to run LP. But most people run DU, which is under Fannie Mae. If you talk to most sellers who the real estate agent is, send me a copy of the proof of funds, send me a copy of the credit report, and send me the copy of the DU. No one ever says, send me the copy of the LP, the loan prospect. Everyone always asks for the DU. It's like industry standard, kind of like General Motors, right? So every car has to pass General Motors inspection level, right? So it doesn't matter what car. Same thing. Most people are going to try to pass DU. So DU now, it's taking rent. That is a game changer, okay? So how does it work? It will help increase home ownership opportunities for borrowers. Fannie Mae is enhancing their underwriting process by considering a borrower positive payment history in their credit asset. Okay, so like I said, they're putting it in the DU. So there's nothing you have to do on your behalf except for making your rent payment on time. When the borrower is currently paying at least $300 or more a month for 12 months, and they can verify it through an asset report, right? So DU, they're going to be able to verify the report of however you make your rent payment on time for the past 12 months for at least $300 or more. It's going to give you compensating factors in the DU that will push you over the edge to either qualify or now you can go conventional. So it's going to give you that flexibility so you don't have to go FHA if you don't want to. How they're pricing it, we don't know. But now it's going to allow more borrowers to go from FHA to conventional. And some borrowers to even qualify. Some people don't have the 3.5% down, and maybe they have the 3% down, and they can take a higher rate to cover closing costs, right? Everyone is in a different situation. It's like, oh, that's only 0.5%. 0.5% can mean a big difference for some people. I, myself, no one is here to knock anybody. at their chance to owning a home. So if they have the 3% and they don't have the extra 0.5%, now they can go conventional. Even if they don't have a 720, 740. If they pay their rent on time for at least $300 a month, for at least 12 months on time, and they can prove it. So if you pay cash and you can't prove it, that's where I think the big problem is going to be. They're going to have to electronically validate it, okay? Here are also the requirements for them to take your rent. Number one, you must be a first-time home buyer, which means you can't own a home in the past 3 years, okay? The borrower must have been renting for at least 12 months. So if you just started renting a place, right, or you didn't report it, now they're going to need a 12-month history. The borrower's rent payment must be at least $300 a month or more. And this is for purchase transactions, right? It's not for refinancing. You can't own a property. You can't be renting somewhere and refinance another property, right? And it's only for purchase transaction, okay? The property must be secured by a principal residence, right? It's owner occupied only. The borrower must have the correct credit score, which is going to be 620. So you need at least a 620. But like I said, between that 620 to 700, people weren't really passing DU. If they did, it either had to be a big down payment or really low debt to income ratio with tons of asset. But if someone has tons of asset and have a big down payment, a lot of times they won't have that 620, right? That 620 to 700 was for the low moderate income where, you know, you're doing your best to pay your bills. You just can't crack that 700 because you don't have payment history, right? But now you have your rent, right? A lot of times because of lack of credit, they can't get that 700, 720, whatever position you're in. Now is a chance for you to buy a home without having to go out and get 3 or 4 credit cards, rack up bills, pay it off, right? Of course, there's people that can do that, but if you're not in that position, now's your chance, as long as you pay your rent on time, okay? Last but not least, this is where the kicker kicks in. The lender must obtain a VOA, verification of asset report, with 12 months, right? 12-month bank statement data through an authorized DU validation service. So when your lender will handle that, they will go through a DU validation service, right? They will either check your bank accounts, right? They will check your bank statements. They're going to check something for you to get it. So definitely, guys, make sure you have your accounts accessible to your loan officer. So what is a verification of asset? So they used to call it verification of assets, or they call it a VOD, verification of deposit, right? It's going to be 12-month bank statements. So if you pay online, they take it out of your bank account, they're going to draw a 12-month bank statement and make sure you pay rent. But be careful. If they see other withdrawals on there that's not on your credit report, it's an obligation that can affect your debt to income ratio. That's where I think it might affect your DTI, depending on what they're taking out to pay. Also, 12 months cancel checks. If you don't want to give the electronic pay, 12 months cancel checks. And this is where I think it's getting a little in the gray, right? This is, we don't know for sure, rental karma. So let's say you don't have 12 months cancel checks. Let's say you don't have bank statements, right? Or you paid in cash, but you can get rental karma to report on your credit report. It will report on your TransUnion and Equifax, which will help bring up your credit score. It just doesn't work on Experian. So if you do pay in cash, or there's no way for you to prove it through bank statements or through cancel checks, go register on rental karma. They can go back 24 months and they can go moving forward. Experian, though, so they'll report on Experian and TransUnion and Equifax, but they're not going to report on Experian. Experian only accepts ongoing rental payments if you pay rent electronically, right? So if you pay electronically, most likely they're going to get it through the bank statements. But if you're trying to pop your credit up, get Experian to report it, okay? Use Experian Company to report your rent. So those are ways to improve your credit, to have the history on there for you to prove that you're paying your rent on time. $300 a month or more, right? Owner occupied, first time home buyer, and now you're able to buy a home. I feel like this rent is really going to push people over the edge to qualify. Middle United States, I think it's going to be a big deal, right? If you were buying LA or on the coast, right? If you were teetering, I think on West Coast, you're teetering from FHA, now you can go conventional. In the Midwest, I think a lot of people who have the 3% down is going to put them over the top. They can buy now. They don't have to save that 0.5%. Oh, it's only 0.5%. 0.5% to you might not be a big deal, but it could be a big deal to someone else, right? Every dollar counts, okay? So right there is the big change. And it's going to take place September 18th. If there's not enough buyers in the market and you feel like the market's going to get cold, we just brought a bunch of more buyers, right? 17% of people who would have qualified now qualify, right? 25%, 29% of the black consumer, right, now has credit, right, through making their rent payment on time to buy. So we're bringing more buyers back in, even though everyone's saying, oh, the market's going to get cold. Yes, it is flattening out a little in certain areas, just not on the coast areas yet, even though there's reports. They're not taking into consideration cash buyers, but now we just brought more buyers back in the market, okay? That's change number one. Change number two, Fannie Mae changes the way they're reviewing credit. It's going to affect multiple borrowers on one loan. If there's one borrower on the loan, they're going to go with the middle score. But when there's multiple borrowers, they're going to do it different. So if you're buying a home alone, it will not affect you. Home alone. But if you're buying the home with someone else, it will affect you guys in a good way. Like when I talked to my boy Sal, I'll tell you a story in a second. And like I said, it's for conventional loans only, and it's going to affect DU or LP, right? DU or DO. Desktop underwriting or desktop originator, right? September 18th. These two rules are going to kick in. This one will affect your credit score. And this is how it's going to work. If there's multiple borrowers above a 620 credit score, right? They're going to average out your two middle scores. First, DU will determine each borrower's applicant credit score. Middle of the three scores receive of the lower of the two when only two scores received, right? If you only receive two scores, they're going to take the lower. If you receive three scores, they're going to take the middle score. Second, DU will average the applicable credit scores for all the borrowers on the loan case file to determine if the 620 credit score required is met. So what does that mean? If you have two credit scores, they're going to merge it together and give you the middle score. Here's an example, right, of two borrowers right here. If borrower one has 590, 619, 648, borrower 2 has 661, 693, 693. The average score is 656. They will use the average score, right, to make sure you have the right score now to qualify to buy. Will they use that score to give you a better interest rate? I don't know. They're just merging the two scores to give you your credit possibility. I'm one of our clients right now. His name is Sal. He has an 800. His lady has a 711. So right now, they're going off the 711, but after September 18th, they can run DO again, right? 711 plus 800 divided by 2, the average. Now instead of being graded with a 711 credit score, you're graded with a 755, right? So how does that affect PMI? How does that affect interest rates? We don't know yet. But now at least when DU and DO, when they're looking at your file, they're going to gear it off the 755. Even though her middle score was 711, his middle score is 800, now they have a 755. It's positioning them in a better position to go conventional. Let's say you were a borrower that had a middle score of 620 and your spouse or whoever buying with you has a 750. You had a 620 plus 750, 750 plus 620, right, divided by 2, you got 685. See how it's bringing your credit score up? Now you can go conventional. You're not having to push to go FHA, right? But yes, if you have a low credit score, you can add yourself as an authorized user, pay down debt. You can do things to bring up your credit score more. So when they do take the average, you have a higher score. So those are the two changes Fannie Mae is making to make it easier, right? So it will be easier to buy, right? One time, right, on-time rent is going to count for underwriting calculations and the credit score, right? These are two big changes that's going to cause people to push them into home ownership. Also pushing them away from FHA, going conventional. There's more flexibility with conventional, with PMI, but now there's more people empowered with the correct information, right? So they can make the best decision out with their family, and also so Fannie Mae can give them an appropriate rating so they can go conventional. Hopefully that was useful information. If it was, do me a huge favor. Save this video, share this video, and like this video. If you know anyone who's looking to buy a home, don't forget to tag them on this video, all right? So they have the right information. Empower them. If you care about a friend or relative or a coworker who's going to buy a house, please empower them. Tag them on this video. If you're buying a house and the person who's buying is not watching with you, tag them on this video. You want to tag these people because you want to empower them, right? Knowledge is power. Home ownership is the biggest investment they're going to make in their life. They should know their choices. And a lot of times people don't know they have choices because they're limited by the information that's out there. Hopefully, that's the goal of our show, is to educate, empower, and to connect you with the right mortgage. All right, guys, let's get some Q&A here. If you have questions tonight, we got answers. Save this video, share this video, like this video, and tag somebody. If you're not following us on Facebook or YouTube, definitely do so. Especially help me out on TikTok and Instagram. All right, guys? Also, if you need to reach out, give us a call, 714-790-9697, or you can email us if you want us to help read or beat your loan estimate, info@whatsamortgage.com. All right, guys, we want to end all our episodes with, our attitude is gratitude. Without you, there would be no us. So thank you so much.